to grow our business. Finally, we'll provide some concluding thoughts. Alibaba ecosystem continues to deliver significant user scale and growth. In the past 12 months, our consumer base has seen robust growth, adding 203 million consumers globally to reach 1.24 billion annual active consumers. In China market, we have added 125 million consumers to reach over 953 million AACs, bringing us close to our goal of serving over 1 billion consumers in China. We have also grown international AACs rapidly, adding 78 million consumers to reach 285 million in international markets. This 1.24 billion consumer base represents diverse demand. Over the years, we have incubated a rich profile of mobile apps with different consumer experiences, supply sources, and value propositions to address different consumer needs and use cases. Today, we have 8 highly engaging mobile apps with over 100 million MAUs. These mobile apps include Taobao, Taobao Deals, Idle Fish, Lazada, AliExpress, Amap, Youku, and UC. They are operated by businesses with either leading and/or solid market position in their respective industries. We have recently reported our quarterly earnings in November, so I won't go into details about our financial highlights. We do recognize investors' concerns about the slowing growth of our China retail marketplaces, which has been impacted by both slowing market condition and increased competition. Later in the presentation, Toby will share with you how we plan to support long-term growth and our operating and financial priorities for some of the key businesses. Nevertheless, it is also important to note that through the execution of our 3-engine strategy, our revenue has become more diversified. Both our international commerce and the Alibaba Cloud business continue to deliver strong revenue growth. These segments now already contribute to about 17% of last 12 months' revenue, excluding SunArt. Throughout Alibaba history, we have always innovated and invested for long term. This way, over time, we have created many strong and profitable businesses such as Taobao, Tmall, Alibaba Cloud. Similarly, over the last several years, we have invested in promising new and growth businesses. These businesses are at different stages of development and therefore have incurred different levels of financial losses. If you recall, we started to provide segment P&L 5 years ago in order to help investors better understand the performance of our growing businesses. At that time, Ali Cloud was still loss-making and generated only 1 billion RMB in quarterly revenue. Today, Ali Cloud is profitable and quarterly revenue is over 20 billion RMB. In 2018, given an expanding portfolio of new business in our core commerce segment, we started to provide the combined losses of key strategic investments within the segment as illustrated in this slide. And we have also provided periodic update of their business progress. Today, due to the comprehensiveness of our businesses, we recognize that it has become more and more challenging for investors to understand the performance of our diverse business portfolio based on our current segmentation, especially those in the key strategic investments within our core commerce segment. We have always believed in providing more transparency in our reporting and disclosure to allow our shareholders to better understand our business and financial performance. It is time for us to add more transparency now. We have decided to provide a more granular reporting of our commerce segment by further subdividing it into 4 segments. The first is China Commerce, which includes the China retail marketplaces, China wholesale, and new retail businesses. Second is International Commerce, including our international retail and wholesale businesses, such as Lazada, AliExpress, Trendyol, Daraz, and Alibaba.com. Third is Local Services, which are location-based services including Ele.me, Amap, Koubei, and Fliggy. And the last but not least is Cainiao Logistics, which is becoming a significant standalone business, serving almost all of our commerce businesses in the ecosystem. Today, for the first time, we're providing you with these new segments' financial metrics. We will also update you the progress of these businesses so that you could better analyze and compare to their respective peers. Our further segmentation not only provides external shareholders with more information, but also reflects how we manage these businesses. Going forward, some of these businesses may have different compensation structures to further align employees and business-specific interests. Some of them could also have their own external fundraising opportunities. For example, our overseas business Trendyol has just done a very successful private placement that was oversubscribed. This business has approximately 24 million AACs and has generated rapid GMV growth over 100% in this past 12 months ending September. Through the fundraising, Trendyol has created a currency for future capital needs, including M&A activities. This also better aligns management and employee incentives with that of Trendyol's future growth prospect. Going forward, we will continuously use the balance sheet of these strategic assets to raise capital that can be used for helping the business growth. Investors and analysts have often asked us how we decide on the allocation of investment capital. There are mainly three factors for our consideration. Number one, its importance to our long-term strategy and goals. Number two, market potential. Number three, whether the business we invest can scale and have sustainable growth. Now, let me turn the presentation over to Toby, who will provide you with insights on our investment philosophy, as well as our plans and priorities to grow our business.
Thank you, Maggie. It's an honor to share this stage with you. Hello, everyone. I'm Toby. Thank you for joining our Investor Day. Over the last 2 days, our key business presidents have spoken to you about opportunities, strategy, and positioning of our respective businesses. In the next part of the presentation, I would like to share with you the financial performance of these businesses as a result of their operational strategies and priorities. As Maggie mentioned, we have a rich portfolio of businesses. These businesses have large addressable markets and new growth opportunities that we believe will create significant value to Alibaba over the long term. Here is a snapshot of the market potential and the key business objectives for each of important businesses that have been presented during the event. These businesses compete in industries with very different industry dynamics and face different level of competition. Additionally, we recognize investors at times have questions about our investment priorities given a large portfolio of businesses under Alibaba Group. At a high level, we are investing for growth, and we will be disciplined in our approach. To help our investors better understand our priorities, here I have added to our 3 stages of growth framework on how we think about operating priorities, revenue model, and the spending focus for our consumer businesses. These consumer businesses do share similar business and financial priorities at different stages of growth. At the seed stage, when businesses are at the early stage of development, we believe growing user scale and increasing mindshare among consumers are the most important priorities. As these businesses grow in user scale, our operating priorities would shift to increasing transaction volume and growth, as mentioned by orders and/or GMV in the traction stage. From a financial planning perspective, our spending focus will be on building core capabilities to position our businesses to compete for market share gain over the medium to long term. At the same time, we will begin to explore and initiate revenue generation opportunities. We believe revenue generation is critical to prove the viability and value of any businesses in the long term. As our consumer businesses become profitable, we will focus more on monetization and profitability under normal business condition and the competitive environment. At this stage, we would focus on innovation and create value-added services that have monetization potential. We would also monitor spending efficiency and effectiveness in order to ensure sustainable long-term profitable growth. Now, let's take a closer look at our consumer businesses within China commerce, local services, and international commerce segments and how they fit into this context. Let's start with China commerce. As you know, our China commerce segment is faced with near-term challenges of slowing macro environment and heightened level of competition. This has resulted in slower GMV and the revenue growth in the most recent quarter. But we also see opportunities to tap into new addressable markets to grow new users that will position us well for the long term. If we reference to the 3 stages of growth framework, we have different operating and financial priorities for businesses such as Taobao and Tmall versus young businesses such as Taobao Deals and Taocaicai. For our Taobao and Tmall businesses, we are focusing on maintaining leadership position by enhancing consumer experience, including, number 1, expanding our membership program that provide more value-added services and greater savings for consumers. Number 2, identifying new brands and subcategories to enrich product supply. And number 3, improving logistics and the delivery experience. We believe these types of investments and spending will ensure continuing strong retention rate and ARPU growth among existing consumers on our China retail marketplaces represented by Taobao and Tmall. At the same time, our consumers are becoming more diverse with different income level and shopping preferences. In today's China, total retail sales in 3rd-tier cities and below has a market size of RMB 15 trillion with significant addressable population. Over the last few years, we have invested in growing our Taobao Deals business to penetrate in this important new addressable market. Since the beginning of 2020, when we repositioned this business, it has grown from around 30 million to over 240 million AAC in just 1.5 years. Obviously, this growth has also generated significant losses during the same period, given high user acquisition costs and greater competitive intensity throughout China, especially in the lower tier cities. However, we are seeing signs of early success with Taobao Deals, adding unique consumers into our ecosystem. Over the last 12 months, Taobao Deals mobile app added about 30 million new incremental consumers that were not Taobao mobile app consumers. As Taobao Deals scales in the future, we believe it's well positioned to generate meaningful transaction volume and growth for our China retail marketplaces in the medium to long term. Next, we believe having solid supply chain and logistics capabilities are competitive differentiation for our China commerce business in the long term, both of which we have continued to invest over the last several years. Through our investments in new retail, we are offering Chinese consumers multiple delivery and fulfillment options of their groceries and FMCG product purchases that are also expanding into general merchandise. Additionally, our investments in Hema, Sunnot, Tmall Supermarket, and Tmall Global have continued to improve our sourcing and procurement capabilities in perishables, FMCG, and import goods categories. These product supply has resulted in greater consumer purchases. As we continue to build our logistics and supply chain capabilities, we are confident that they will enhance the competitiveness of our China commerce businesses in the long term. Before I go into other segments, I'd like to provide some perspective of our China commerce business. As you know, our China commerce business is faced with increasing level of competition. Our peers are increasing investments to attract users, and most of them continue to exhibit elevated level of spending and losses. We believe offense is the best defense, as suggested by our 3 stages of growth framework. Within our China commerce, we are focusing on creating value for customers and consumers on our Taobao and Tmall platforms. At the same time, we are investing in new businesses such as Taobao Deal and Taocaicai. They are growing new users by penetrating into less developed areas. These important businesses are supported and strengthened by our ongoing investments in innovation, supply chain, and logistic capabilities. We believe these capabilities will further enhance user retention and improve user acquisition efficiency for our China commerce business, allowing us to maintain our leading market position and serve new consumers in the less developed areas. Next, let's look at our new local service business segment, which includes businesses such as Ele.me, Amap, and Fliggy. These businesses position us well to serve Chinese consumers' increasing need for great digital service in the to-home and to-destination scenarios. As our local service president has pointed out, China has a significant and growing local service market of RMB 20 trillion that is still at the early stage of development. Consumers want more choices of digital services that make their lives more comfortable and convenient. These businesses still have ample consumer penetration room, and we are still competing for market share and transaction growth. Over the last 12 months, ended September 2021, our investments in both Ele.me and Amap businesses have yielded robust users and orders growth for their respective mobile apps. Ele.me grew users by 28% year-over-year and orders by over 35% year-over-year. Amap's daily active consumers tripled and average daily orders grew over 190% year-over-year. Investing in users and orders growth remain a priority for our local service segment. At the same time, we have continued to improve our suppliers' onboarding process and servicing capabilities that will provide long-term monetization potential. Now, looking beyond China, internationally, we have fast-growing international commerce businesses such as Lazada, AliExpress, Trendyol, and Alibaba.com. Currently, our international retail commerce business combined have an annual active consumer base of 285 million, above 37% year-over-year. These businesses have an extensive coverage of around 200 countries and regions. If we carve out the business regions of our international commerce businesses, the addressable population will be around 1.2 billion people. Given relatively low e-commerce penetration and a growing number of online users in these markets, we believe it is important to invest in growing our international retail commerce's users, orders, and GMV scale. Over the last 12 months, our paid GMV was about 44.1 billion, with paid order growing over 60% year-over-year. We remain excited and confident of our international commerce business's growth prospect, and we believe it will become one of the key growth drivers of Alibaba Group. Buyers, sellers, and 3PL players from our global commerce businesses have benefited from the capabilities of Cainiao logistics infrastructure and services. Over the years, Cainiao's revenue generated from third-party have increased significantly and has become less reliant on revenue from Alibaba Group's businesses. Over the last 12 months, Cainiao, as a standalone entity, generated over RMB 60 billion in revenue, of which around 70% was from third-party paying customers, including merchants, consumers, and the logistic partners. By geographies served, Cainiao's international revenue has been faster growing and represented about 57% of its overall revenue. Cainiao has been making large investment in global smart logistic infrastructure, including logistics hubs, line haul, overseas sorting centers, and last mile. These investments and capabilities have supported the solid growth of our AliExpress and the team of global businesses as cross-border merchants leverage fulfilled by Cainiao solutions to improve delivery speed and the consumer experience. Cainiao has also built many valuable domestic businesses and assets. Its domestic revenue is mainly driven by our Alibaba businesses and the domestic end-to-end solutions for third-party merchants. These businesses require increasingly connected and automated fulfillment centers and warehouses in order to ensure improving service quality and cost efficiency. Currently, Cainiao has under management a portfolio of over 10 million square meters logistic parks, sorting centers, warehouses, and fulfillment centers. Lastly, Cainiao has continued to innovate and develop several 2C businesses that contributed significant value to consumers and the industry. For example, in the first half of fiscal year 2022, around 64 million packages are handled through Cainiao Post and Cainiao Guoguo on daily basis, which was 88% growth year-over-year and represented about 21% of China daily parcels. These businesses are still in the early stage of development and has revenue generating potential in the future as they expand service solutions and the consumer base. In terms of future investments and spending, Cainiao will continue to expand its global logistics infrastructure to tap into the strong growth of cross-border e-commerce, as well as focus on improving service quality in China by enabling our merchants and partners. Next, let's look at Ali Cloud business. We are very excited about the long-term revenue and profit-generating potential of our Ali Cloud business. Our Ali Cloud president has spoken to you about our leading market position in China from both revenue and technology perspective. Here, I will supplement his presentation by providing you some context of the business's revenue composition, its cost structure, and its value to customers. Over the last 12 months, ending September 2021, our Ali Cloud business generated RMB 69 billion revenue, exhibiting solid growth of 37% year-over-year. Not only are we seeing relatively resilient revenue growth from internet industry, we are also seeing increasing revenue mix from non-internet industries. Over the year, Ali Cloud revenue base has also become more diversified, with revenue contribution from non-internet industries steadily increasing and now stands at about 49%. At the core of Ali Cloud is its proprietary technology infrastructure. Ali Cloud has continued to invest in R&D that has improved the efficiency of computing infrastructure and has also expanded a wide range of value-added products. For instance, its average ECS cost per call has continued to decline, translating into great cost saving. Majority of these cost savings are reinvested back into more R&D investments and benefits for customers, creating a virtuous cycle of better customer retention and enhanced competitive advantage. Relative to Ali Cloud's last 12 months' revenue growth, cost generated from servers, IDCs, and network infrastructure exhibited a much slower growth, reflecting better utilization through technology optimization and upgrade. At the same time, we have stepped up our spending in R&D and talent acquisition. We believe our ongoing investments in R&D and talents will continue to create technology differentiation and will further enhance our competitive moat in the global cloud computing industry. Ali Cloud is well positioned to enjoy the tailwind of China digitization. On top of investing in organic growth, we also leverage an M&A and investments to grow our business. Alibaba's M&A and investment strategy is disciplined and has always been consistent in its goals. Our first goal is to create value for Alibaba's existing business, help our existing business to expand its scope and strengthen its capability. Our second goal is to capture future opportunities such as the next chapter of digitalization, high-tech, solution for climate challenges, etc. Both types of investment are of great value to us. However, with the world currently experiencing rapid change, investing in the future will become increasingly important. This slide provides a glimpse of some of our investments over the past year. For creating value for existing businesses, we focus on new user acquisition and new supply, user experience enhancement, and business digitalization. Before making investment, we would closely analyze how the target companies could add value to our business, and would jointly design synergy creation plans. After the investment, we would closely monitor the implementation to make sure value redemption. For capturing future opportunities, we would focus more on the future trends instead of our existing businesses. I will further elaborate on in details later. These investments has generated very good synergies. They have proven to be win-win partners that have not only benefited Alibaba, but have also created great value for our investee companies. Here are 3 examples. One a controlling stake investment, one a JV, and one a minority investment. For the minority investment of Cycle Mobility, the synergy is quite obvious. I will take more on the first 2. Let's start with Sun Art. Since we made our first investment in 2017, we have made significant strides with our new retail strategy. Over the past 4 years, we have helped Sun Art to elevate its digitalization level. In the fiscal first half, Sun Art online sales reached nearly 30%. And beyond that, we are realizing great value for supply chain integration. Direct supply from Sun Art to Alibaba has increased 360% year over year, greatly enriching our product supply in Taocaicai and hyperlocal retail. Flying Fish Tech is a JV we formed with Worldwide Logistics Group. In the cross-border B2B commerce sector, traditional freight service is of low quality. The quotation of logistics service lacks transparency. There is no visibility to trace and track shipments, and the communication efficiency is poor. So we innovated a digital freight service through Flying Fish Tech, which efficiently solves all these problems and delivers a much improved customer experience. The cargo volume served by Alibaba Digital Freight has increased 66-fold over the past year, and the customer satisfaction rate has improved by 30 percentage points. Having presented our progress in leveraging investment to create value for our existing business, next, I will share with you how we are investing to capture future opportunities. We start by identifying future opportunities from 2 perspectives. One is our own strategy, domestic consumption, globalization, and technology. The other is the future trends, including economic developments, social change, and the disruptive innovations. In line with these objectives, we have come up with 7 investment themes. The first 4 investment themes, mass consumption, enterprise service, high-tech, and globalization, are obvious and are closely linked to our overall group strategy. I won't elaborate further. Instead, I will share more about our thinking behind the green economy, silver economy, and the rural revitalization. For green economy, we have an obligation to achieve carbon neutrality, which is in line with Alibaba's commitment to social responsibility. To get there, we need an accelerated capability building, but we also see decarbonization as an opportunity. Carbon neutrality is a game changer. It will fundamentally change how we produce, transport, and consume. It will give rise to new technologies and business models, and we are very excited about the new future. For silver economy, we are living in an aging society. It's expected that by 2030, China's over 65 population will reach 240 million. New demand around consumption, healthcare, and medical services will arise. We will stay close to this group of users and seek ways to provide value to them. Last but not least, rural revitalization. China's urbanization rate is expected to further grow and reach 70% in 2030. We believe this will require more efficient and high-tech driven solutions for agriculture production. There will be huge opportunities for us. Now, let's wrap up with some concluding thoughts. Over the past few quarters, we have faced with increasing challenges from many fronts. These have been brought about by changing macro conditions and increased competition. But they also bring into focus the fact that there is much more we can do to create value for our customers and further enhance the user experience. These are issues that we will confront head on. Going forward, we must, first and foremost, ensure sustained business growth. It's only through growth that we can create new value and invest for the future. Second, we must not allow near-term challenges shake our vision and strategy for the future. We remain firmly committed to investing for the future and will do so with a high degree of discipline. Our investments will focus on capabilities development and value creation so as to build a solid foundation for and add a strong impetus to our long-term sustainable growth. In Alibaba history, we have several times met with and overcome huge challenges. Today, we are equally confident that we will succeed in delivering sustained, durable growth by taking the long-term view while tackling current issues pragmatically. When you invest for the future, you often won't see immediate financial results, but we will ensure a highly disciplined approach and are committed to providing transparency to the investors about where we are investing and how these investments are performing. Thank you.